Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. You know what to do. Go ahead and hit the like right away. Listen, this one is going to be a little different. I just wanted to chime in. I got a couple of videos I want to play for you guys, but it'll pretty much keep you, get you up to date on what's happening. Everything that's happening with the stock market right now is political. The geopolitical situation has calmed down, but we have the big, beautiful bill deadline, which is July 4th. They're pushing it through Congress right now. We'll read something about that. We also had President Trump deals with Canada are falling apart because of, I'll show it to you right now. Let's just go right into it. Let's just take these down the road. S&P 500 closes at a record Friday, which is today, overcoming even more trade agents. Okay, so what is going on right now is these trade deals are falling apart. And, China is next. We got the EU, we got China, and we got Canada. And Canada's deals are falling apart. Let's see what's going on with that. I got that right here. President Donald Trump said on Friday that he terminated trade discussions with Canada, citing an incoming Canadian tax on tech companies, including those based in the U.S., primarily based at those in the U.S., according to Treasury Secretary Scott Bessent. Okay, I'm going to play a video from him. In a post on Truth Social, Trump referred to Canada as a very difficult country to trade with and said that its levy on tech firms, the first payment for which is due Monday, is a direct and blatant attack on the country, right? You see this levy on tech firms, which is generally here in the United States. Okay, we have all of the big tech companies. The president didn't like that, and he said he's terminating, and the stock market absolutely dipped. Okay, absolutely dipped on that. I'll show you that in a moment, right? So then we got Senate scrambles to advise Trump's big, beautiful bill amid shifting deadline, right? His deadline is July 4th, and now they're trying their best to push that through. Of course, it is going to add to the debt ceiling, but it's also going to stimulate the stock market, I think, because there's some more money printing in there, right? So you could see what happened here. Everything was just mooning all-time new highs with everything, and then came the talks between the U.S. and Canada fell apart, and literally the NASDAQ literally went red, the NASDAQ and S&P, after hitting all-time highs intraday, went down, and the only thing that still closed under an all-time high is the Dow. The S&P and the NASDAQ hit intraday all-time new highs. And then if we just look at the NASDAQ, it took it the hardest. Look at that. It just literally mooned up and then fell from the top. Look at that. Fell down. Look at that. 200 points, a full 200 points, a full percent, based on the news that talks were off because of big tech, which of course is the NASDAQ, right? And so you have all of these things happening at the same time. Now I'm going to play for you something really briefly on why Palantir was actually tanking today.
First up, Palantir announcing a $100 million deal with the nuclear company. The startup is paying Palantir to develop an artificial intelligence operating system to make reactor construction faster, more predictable, and safer. In an interview with Yahoo Finance's Josh Lipton yesterday, Palantir head of defense Mike Gallagher shared the motivation behind this new partnership.
I'm going to spare you the rest of that. The market did not like this partnership. You can dig deeper into this. The market is reacting negatively to that new partnership. There may be more piled on to it. I'm just trying to get through it. Okay, so I'm going to play you a video that's going to actually end this, but I want you to listen to the entire video as Treasury Secretary Scott Bessent talks about every single thing. This lady from CNBC asked all of the questions that I would want to ask, so I can just play the video, all right? But before that, I want to tell you guys that there could be, even still, I was thinking that I was still looking for a pullback. And the pullback we had a few days ago, was not the actual pullback that I was looking for. And, you know, someone could say, Larry, is this the pullback you were looking for? No, I was looking for a pullback, though we are in the markets and I am long-term bullish, meaning I believe that we could hit new highs. We already have, but I believe that we could close this year even higher. That's what I believe. But I believe that there's going to be a pullback before that. And I was still thinking the end of this month or the beginning of next month. That's the time period that I'm looking for. Now it's going to be harder for the market to continue to move with new highs in the NASDAQ and the S&P. So we're getting new highs and it's going to be harder for us to continue to push higher. Someone is asking, I can hear you, should I take profits? You have to make that determination. You could use your tools. You could use stop losses or trailing stop losses to protect some of your gains. As you can see, Palantir has been pulling back today based on this news. Now, anything that could potentially drive a market down is going to come down because it is priced high. I'm expecting something, and if it doesn't happen, then I'm happy because it's money out of my pocket too, good people. All right, so now I'm going to play this video in its entirety, and that's going to be the end. Listen, for those of you that are in Money Moves, I just dropped a brand new video in the Options for Dummies class. Come and join us, good people, because whether this market continues to ramp up or if the market absolutely starts to tank, we are equipping you to make money either way with options. I make it simple. My theory is talk to me like I'm 3, and I just added another class. All of the classes, every single lesson is still up, good people. It's going to be the only link that's going to be below in the description, and I will pin a link in the comment section. Okay, so I want you guys to listen to this in its entirety, and it'll be the end of this video, but I will dig deeper into why I think the market will pull back. My good friend Josh actually came through and kind of verified it. So we'll probably make that video over the weekend. Pay attention and listen to every single thing that Treasury Secretary Scott Bessent is saying.
In terms of a digital services tax, how is that factoring into negotiations there?
Oh, well, no, that's not right. The European Union does not have a digital service tax. Several countries within the European Union have digital service taxes. None of them have done those retroactively, and we're in active discussions with them to take those down. Because again, who has the great internet companies of the world? It's the United States of America. So it singles out our great American companies.
So Canada, possible escalation depending on how this plays out over coming days. De-escalation, though, and that was the news of the morning with China. What are the details of this China trade agreement?
Well, it's a continuation of the Geneva Agreement, and the centerpiece of it is that we agreed, and it's away from the tariff measures because the tariffs came down immediately after Geneva. Post-Geneva, we had an agreement with the Chinese government to start the flow of rare earth magnets again. They were not as forthcoming as we had hoped that they would be. So the U.S. implemented non-tariff countermeasures against the Chinese government. We believe that the rare earth magnets are starting to flow again under a licensing agreement or a licensing regime that the Chinese government implemented on April 4th. And when we are certain that the magnets are flowing again, we will drop our countermeasures.
So a lot of speculation out there about whether this July 9th deadline for trade deals is a hard line or whether there's some flexibility. Is there flexibility?
Again, it's going to be up to President Trump. We're going to follow his lead. What I would think is going to happen is there will be a lot of smaller trading partners. We will just send them letters. There will be a group of deals that we will land before July 9th on or about. And as Secretary Lutnick said yesterday, he believes there are 10 or 12 of those. And then there are probably another 20 countries where they could go back to the reciprocal tariff of April 2nd as we work on the deal, or if we think that they are negotiating in good faith, then they could stay at the 10% baseline. So there are a lot of moving pieces here. A lot of it is based on the consistency of the negotiations. And again, it will all be up to President Trump.
You know, historically, trade deals have taken years sometimes to craft. It's incredible how quickly you're moving here when you're talking about 10 waiting in the wings and perhaps another 20 behind that here in the next couple of weeks, just to put it in context. Another thing that seems to be poised to move quickly here, at least in the next couple of days, is the Republicans have reached a tentative deal regarding the state and local tax deduction, SALT. At least that's what we're hearing. That had been a sticking point. My colleague Emily Wilkins is reporting there are a few other key topics still being worked out. But can this big, beautiful bill make it to the president's desk by July 4th?
I think there's a very good chance, and the only way to get there is for the Senate to start voting this weekend. I think I was just with the Senate Republicans, and I think they're going to start voting tomorrow.
Do you see potential roadblocks here over the next week?
Look, nothing's done until it's done, but President Trump's leadership has gotten us here at what people thought would not be a possible date. Leader Thune, Speaker Johnson have done an incredible job of holding small majorities together and getting the bill moving forward. So I'm optimistic we could have a July 4th signing.
What does the bond market need to understand about this bill, what it's going to mean for government spending and the debt load?
Again, it is the largest cut in discretionary spending non-discretionary spending in history. And the other thing too is, what do we care about? We care about growth, we care about spending. So if we can stabilize the spending and up the rate of growth, then that's how we start stabilizing the debt to GDP, this terrible situation we had. The deficit to GDP, 6.7%. We'd never seen anything like this when we weren't at war or in a recession. So, this was a peacetime deficit. So we are going to slowly bring that down in a methodical way, and we will stabilize the debt to GDP level and start bending the curve down.
Interest rates are still elevated, even as the dollar continues to weaken against other major currencies. Do these market moves concern you?
Which market moves?
What we're seeing in the dollar as it weakens and the fact that interest rates are still elevated here.
The couple of things are, Morgan, is I'm not sure why it would concern me that it's natural for currencies to move around. I've traded currencies 35, 40 years. So, currencies move up and down. The U.S. still has a strong dollar policy, and we're putting the economic factors in place to continue that. On the other hand, we are seeing for the first time a real attempt at defense spending in Europe. We're seeing the Germans take off the debt brake. So, more fiscal spend would tell you that the euro should appreciate.
If we stick with rates, and particularly here in the U.S., the Fed was slow to respond to spiking inflation a couple of years ago. We know the president's been very vocal in criticizing the Fed chair. Is it the president's concern that the Fed is behind the curve again?
Well, not my words, but the president's. He calls Chair Powell too late Jay, and so he's obviously worried that the Fed's behind the curve again. And Morgan, I would just point out that studies have shown that people who fall down then tend to look at their feet, which makes them fall down more. And the Federal Reserve fell down on the American people in 2022, let the great inflation get away from them. They should have been hiking sooner, so maybe that's what we're seeing here.
There's a lot of market chatter emerging right now about the possibility of a shadow Fed. How disruption would the nomination of a new Fed chair this far out from the end of the term of the current one be for the market?
Well, look, I don't think anyone's necessarily talking about that. There will be two seats opening, or there will be one seat definitely opening in beginning of the year when board member Kruger leaves, and then the chairmanship will open up in May when Chair Powell leaves. So Chair Powell doesn't have to leave. He could stay on the board, not as chair. So there is a chance that the person who is going to become the chair could be appointed in January, which would probably mean a October-November nomination.
Your name has been floated in some media reports as a possible replacement for Fed chair come next year. Your response, is that a job you'd consider taking?
Look, I'll do what the president wants, but I think I have the best job in Washington. We're making meaningful change, working on the president's agenda every day. I get to work closely with the president. I think that, as I like to say, we've done peace deals, trade deals, and tax deals. We spent the first 100 days setting the table on those. Now we're going to be landing all those over the next 100 days. So I think that's going to be pretty exciting.
All three of those we've been talking about this week. Finally, the idea, and I think this is really key, and it kind of brings us back to the beginning of this conversation with trade and tariffs, but this idea of higher inflation tied to tariffs. Case in point this morning, we haven't really seen it show up in the hard data. The Fed and Wall Street economists think that that's something that's going to materialize this summer. How are you and the administration gaming this out and thinking about this inflation dynamic?
Well, look, as you said, it hasn't played out, and we're seeing very low numbers. And forget imported inflation, because if we were to get it from tariffs, which has not happened, it doesn't have to happen. That's a small part of the inflation calculations. What we're seeing is service inflation drop. I think we're going to see the rent component drop, and the overall housing component, which is implied owners' rents, drop. So the Fed's measure of supercore inflation is way down. PCE year over year is down. So it looks like the trends are quite good. We're at a 4-year low in gasoline prices, so we're going to have a great summer travel season. And Morgan, one thing I heard you talking with your colleague earlier when they talked about the April tariff panic. So we found out today, this episode from April 3rd to today is the fastest bounce back after a 15% decline in S&P history. Fastest bounce back ever. So, the administration doesn't look at the stock market every day. What we try to do is set in place economic fundamentals, and presumably the market had a chance to digest the panic and is looking forward. So, I think it is telling you that the tariff panic, or as I like to call it, tariff derangement syndrome, was overdone. We're seeing earnings growth. We're seeing a good path for interest rates. So, I think the economy is looking pretty good.